Polygon recently partnered with Eclipse to launch a new software, Polygon SVM. This software will allow Solana apps to migrate to Polygon or go multi-chain, increasing network throughput and offering enhanced interoperability for crypto-related businesses. The testnet for Polygon SVM is expected to go live in the first quarter of 2023. Additionally, there will be an audit-upgraded testnet for Polygon ZOVM that will feature support for Etherscan and LUNC. Despite the current bearish market trend, Matic's popularity has increased. It has become one of the top 2,000 Ethereum whales most used smart contracts, suggesting a trend reversal may be likely. This recent announcement from Polygon regarding the launch of Polygon C-level virtual machining partnership with Eclipse will likely increase the network's capabilities and offerings, allowing projects developed on Solana to leverage the capabilities of Polygon's scaling solution. The testnet for Polygon SVM is expected to go live during the first quarter of 2023. Polygon also announced an audit-upgraded testnet for ZOVM, which will come with performance improvements and support for Etherscan and LUNC. However, despite these updates, the current market performance of Matic remains bearish. On-chain metrics such as MVRV ratio, active addresses and net deposits on exchanges point to high selling pressure. Matic is still popular among whales, as it recently became one of the top 2,000 Ethereum whales most used smart contracts. Despite the bearish trend, the possibility of a trend reversal can't be ruled out considering whales' interest in the aforementioned updates. Luna Classic has experienced significant instability. This is due to the collapse of the Terra ecosystem in May 2022 and the FTX crypto exchange in November 2020. Despite recent falls, LUNC is likely to rally again in the near future. The Terra Luna Classic community is coalescing around proposals for boosting the altcoin's price. The most promising proposal to help the coin is token burning. This has been implemented by Binance and other sexes, and has already been successful in raising the price by 60%. However, there are still uncertainties. Legislation may ban algorithmic stablecoins such as Terra USD, and market manipulation may have been attempted. The future of Luna Classic remains uncertain, and investors should do their own research before investing. This article provides an in-depth overview of the Terra Luna Classic token's performance, from its launch in 2019 to the present day. It highlights the token's link to the Terra ecosystem collapse in May 2022, as well as the subsequent market losses and SEC actions against Terraform Labs and its co-founder Do Kwon. The article also explains the importance of token burning for the coin's survival, and looks at the various predictions of LUNC's price over the next few years from different analysts and platforms. Lastly, it emphasizes the need for investors to do their own research and take into account the inherent uncertainty of the crypto market before investing in LUNC. John E. Deaton is making the case that crypto tokens should not be labeled as securities. The SEC's narrative that the token itself is a security should not be allowed to continue in the crypto industry. He explains that although a token could be offered and sold as a security, that does not make the underlying asset or token one. He cites 3 references to back his point and believes that calling software code securities is wrong. John E. Deaton's argument makes a compelling case as to why crypto tokens should not be labeled securities. He points out that the token itself is nothing more than software code, and that it is the circumstances surrounding its offer and sale that determine whether it is a security. He cites several references to back up his point, including the Telegram case, Bill Hinman's speech, and Lewis Cohen's article. He also emphasizes that even if a token is previously sold as a security, it should not be labeled as one. This is an important point to consider in the ongoing debate over the SEC's classification of crypto tokens.